This is spot silver. You're already familiar with very bearish reading that this is potentially a B. Yes, here on the weekly scale that is an A. That's a B. We're getting down for pretty hellish C. Yeah, you're already familiar with that. I want to actually introduce now an alternative that discusses the possibility of silver falling but actually not breaking the floor here, not actually sliding into complete all-out panic in a big C, but in fact doing something like that it's going to come down, it's going to perhaps test the floor here, but then we're going to have a big jump. It'll go above this level. What's the idea behind that? Is that the triangle that you see here would end up being part of a very complex A, B, C. And what we are doing now on the weekly scale, we're going to see silver coming down. We're going to see silver coming down, giving us extended correction here down to the floor, probably even nearing 14. But as I said, not breaking panically under the previous low, and that's going to turn into an A. That's a complex A, B, C, D, E, B in the middle. Don't confuse with a big B, okay? It's a different kind of B. It's a different scale. You have an A, you have a B, and that's going to be a 1, 2, 3, 4, 5 down on the weekly. So it's going to last easily 2-3 months. Yes, silver is going to be looking down for 2-3 months. And then when this is over, in fact, the leg that is likely to be created here, it's going to be relating to the leg here. Do you see? This one we judged was composed of A, B, C, X, A, B, C. There is nothing in the world stopping this one from becoming the same thing, meaning A, B, C, X, A, B, C, or a 1, 2, 3, 4, 5. Normally, when you deal with a C, normally the C is just a straight 1, 2, 3, 4, 5. The A can be complex, the B definitely complex, but the C often is a straight a rollout of 5 legs. Okay, we don't know how it's going to be, but that is the projection that if silver falls, it's not a guarantee, sure guarantee that it's going to break the floor and it's going to go into a panicky C. Okay, now let's examine step by step what happened in silver recently. Now, I am in the opinion that silver terminated the first leg down. I think that silver has given us 1, 2 on the daily, 1, 2, 1, 2, 3, 4, 5, 3, and I think we had a perfect triangle here. Silver dipped under the previous low, that was the third wave, and finished with a 5 waves that began from here. This took quite a bit of time, more than a month, yeah, to quite a bit of time. So it seems to me that silver is going to go for at least 2 weeks of lateral movement that would see it oscillating, I would say, between 17 to 16.2. Yes, giving us something like that. That'll be an ideal ABC. Okay, and when it's ready, it's likely to come back and actually slice through this level, 16.15, 16.15. It's going to slice through that. It's going to go down in a third wave. Okay, that is the best reading that I have for silver currently. Take a look. I think right from the bottom it has indicated, I think, a structure of 5 legs, 1, 2, 3, 4, 5, or 1, 2, 3. That's still a 4th wave, still ongoing. It looks to me like silver short term wants to go higher. Yeah, that looks to me pretty likely. Silver wants to go higher, and the correction is going to keep silver in a fairly non-eventful trading range, as I said, for a few weeks. Now here's an interesting chart, that is the chart of basically bringing together the chart of the euro US dollar with spot silver. Yeah, we already examined the euro US dollar versus gold, spot gold, and this is examination for what I think could unfold now. Yeah, the relationship between them. Now, like in the case of euro gold, we saw a reasonably good correlation. Again, not perfect. We can point out here over, they are both running on the daily scale. We can point out many instances where they didn't have, if you like, perfect correlation. For example, and I don't have to spend much time to see that. You see these two highs here? Look, where are they? In spot silver, we didn't see a new high, but the euro did shoot for a new high. But at the end of the day, what happened is that this was a consolidation and the euro continued higher. This was consolidation and silver continued higher. You see, they do maintain the large, movement, the big movement is being reflected quite well. Same kind of performance. Now, bringing this even to a closer focus, I'm going to highlight again the considerations that we put forward in the case of the euro, and that's the euro in red. Okay, they correspond, the colors correspond. So you remember we said that this is a 5-wave run. We do not have to commit ourselves to a forecast whether it's going to go a lot lower, the euro, or whether it's going to go into a correction like that. What is very important in the case of the euro is that the movement that started right from here, which was late 2016, early 2017, that movement most likely found an end. We are now looking at a 5-wave run which is behind us, and we are looking at a correction that is likely to unfold to relate to the entire move. Just this in itself is already plenty of information, because it gives us the time scale of the correction in the euro against the US dollar. Then that tells us that if the relationship between spot silver to the euro, the broad-based correlation here is likely to continue, that means that silver is going to be under pressure for easily that length of time. Do you see where I'm going with this idea? It is likely that silver is going to remain under pressure because the euro is going to remain under pressure for at least 3 to 4 months. So if we now zoom in further and we just look at what I've just explained to you in the case of silver, that silver will remain in uneventful trading range. If anything, it is likely to continue down because the euro is going to be under pressure. So it's not impossible to see that in fact silver could actually break this level and go down to check the floor. And when the euro US dollar correction will be over, and we suppose, we don't know, if the euro is coming back strong, then evidently silver is going to come back strong. And that idea that I just put forward in the case of silver, that could turn into an A, that could turn into a B, and that will be a C. That's it. It's going to be also reflected in the euro. The euro has given us first shot up composed of 5 legs, went down correcting, silver went down correcting, the euro coming back in a big swing, C or third wave, whatever. Silver is going to join. Silver is going to come back exactly like gold is going to do the same thing. Now let's have a look here at gold. That is the weekly scale of gold, and again, you are familiar with the idea of the very bearish doom gloom scenario, that's an A, that's a B, and gold is going to plunge well under 1,000, etc. Okay, there is no point spending hours and hours now debating which one is the correct one. Now look, you have suggested, Ronnie, that we have an A potentially here. We have potentially an A, B, C unfolding here. You said in silver, and now you're saying that will turn into an A, B, and we would have a great C. Well, yeah, the potential is there. The technical structure is definitely possible. It could evolve into giving us this kind of perfect setup of an ABC, with this being an A, that's a B, then going up. But I can't know now that that is the only pattern that is governing the price action. Do you see? So we can spend hours and hours debating, but it's going to just be a waste of time. I think what's important now is to see what's the potential for a downside here now in gold? How far it's likely to go? And the way I go about it, I bring together several other markets that are highly correlated with gold or with silver, and then I make the best assessment that I can. I especially like to go and pick a forex pair where I feel that the pattern is so clear. All we want is in life, we are chartists, all we want in life is a clear chart. It's a very well structured movement where we don't have many doubts, where it looks really like it's jumping off the screen at us. Here we go, we got 5 legs. That's all we want. And some forex pairs, and there are plenty to choose from, some forex pairs do have that. And then you study the correlation with the market that is of interest to you, and you see over time if this correlation is serious, if it's workable, you know. And in the case of gold, I think that there is a fair chance it's going down at least to this level. That's the weekly. We do have divergence here on the weekly. Do you see that? You don't want to ignore that. It's not live or die kind of signal, but you don't want to ignore that. This is important. It tells you there is not a lot of momentum on the side of the bulls at this point. And now we're going to see the daily. So the assumption is that if we go for some substantial weakness that could last easily 2-3 months, we could head eventually down there to 1120, and not necessarily guaranteeing us a break of 1050 or slightly under 1045 or whatever was the figure here, 1046 or so. Okay, the low registered here, not necessarily guaranteeing that, but going down as low as the previous low registered here, 1120, which composes for us the A, with this being an ABC, that being an A, which is composed of the movement that you see here, and then pretty complex structure here with an ABC, ABC which is an X, ABC which is terminating the B. So you have an A, you have a B, and then a 5-wave run that terminates you C. You are with me? That's an A, that's a B, that's a C, that terminates you B. So you have an A, you have a B, and down we go for that C. Okay, nobody guarantees that we're going to have picture perfect textbook style 1, 2, 3, 4, 5. In fact, I already have problems just looking at the few legs that started here, and I'll show you in a sec what I mean by problems. The forecast for the next 2-3 months is basically that we will see gold drifting lower towards, at least towards 1120. It is possible, as I mentioned, it could break a lot lower, but let's not worry about that now. Let's just get this right. That's already plenty for trading. I think you would agree with me. If we trade the futures, that's already plenty in itself. And the issue that I am battling right now is not here. This is something that I can more or less work with, and I think that on the 60 minutes I think I can detect a reasonable 1, 2, 3, 4, 5. Okay, and that's my A, which means that gold short term would remain quiet for a few hours and then would run up to give you something like that. Okay, that's ABC. In the same style that we discussed in the same manner that we discussed the Euro-US dollar. My problem is with this. I'm not terribly sure what to do with that. I am pretty convinced that I have to start counting from here, because I do see the end of the movement. It's possible I'm wrong. I have to start counting from here. I'm not terribly sure. I do have, of course, some ideas how to go about that. There is one idea that is not my favorite, but it's a possibility, is that this is 1, that's an A, that's a B, and that's going to be a C. So that's 1, 2, and that's another 1, 2, meaning when gold goes down, it goes into 1, 2, 1, 2, and then 3, 4, 3, 4, you see. Now, it is not impossible to suggest that we might go down in a whole series of A, B, C, X, A, B, C, X, etc. That is also possible, okay? So that is currently my idea concerning gold.